Honourable members, question time. The Honourable Member for Madang.
Thank you, Mr. Speaker, for affording the people of Madang to put their question to the government minister without notice. Mr. Speaker, my question is directed to the Minister for Treasury, Honourable Ian Lingstaki. My question is in my capacity as the Shadow Minister for Treasury, Finance and National Planning, as well as a member for Madang and also a chairman of the Madang DDA. Mr. Speaker, my question relates to the application of GST to government institutions, entities including national parliament, departments, provincial, local level government, statutory entities, including provincial governments and DDAs. Mr. Speaker, every year through the Department of Treasury, the national government appropriates 2 billion kina in service improvement grants and infrastructure grants to each province and district. Mr. Speaker, each district is supposed to receive up to 10 million DSIP and 5 million infrastructure grants, and if you're lucky and you're in government, 5 million kina for kina. Each province receives 10 million in PSIP and 10 million in infrastructure programs. This makes up the total of 2 billion kina. When each province or district receives those grants, they then make decisions on how those grants are to be expended on projects, essential services in the sectors of education, health, law and order, infrastructure, and economic. Where contractors or suppliers are awarded contracts to provide the services to the districts or provinces, and after being awarded the contract, they will invoice the district and provinces, and they will be paid for their services, and they will charge a component of GST. And upon payment of those GST or the invoices or processing the claims for their invoices, the district treasury and provincial treasury will remit the payments to the suppliers and hold back the GST component, which is then collected by IRC. Now, GST was introduced in July of 1999. It was a part of a broader tax reform aimed at modernizing PNG's tax system, improving revenue collection, and aligning with international VAT and GST systems. It applies to most goods and services as well as imports and some exceptions who are zero rated or exempt to GST. So, Mr. Speaker, other countries also apply GST. And I took the time to look into their system of how they apply GST and whether government entities are required to pay GST. And for Australia, there are certain services provided to government entities, or which they classify as government departments, local level councils, government-owned entities and statutories that don't pay GST. And they relate to services provided in the areas of education and health. And also applies to New Zealand government in applying their GST or VAT tax. Now, their system requires some of the suppliers to charge GST to their government institutions and entities, and it also provides the opportunity for those government entities or institutions to claim back refunds. My issue is, every year the government pays 2 billion and the government or IRC collects 200 million back. So you are taxing tax money. So if a district receives 20 million, 2 million is sent back to IRC, the money that is supposed to be spent on essential services to the people, not taxing the tax money. Now, other countries provide tax refund where they pay GST. We don't get a tax refund. Provincial governments cannot claim refunds, DDAs cannot claim refunds. So my question to the Treasury is, can you explain the logic in this policy of taxing tax money? If you agree it is illogical, would you agree for my office to work with your office to bring a proposed amendment to the IRC Tax Act to introduce amendments that provides zero rating or tax exemptions to all government institutions, including this national parliament, including provincial governments, and including authorities and state-owned entities. So we can apply the maximum benefit of tax money back to the taxpayer and not back to the tax collector. Thank you.
The Honourable Treasurer.
Thank you, Mr. Speaker. I want to thank the member for Madang and the newly appointed Shadow Treasurer for his long explanation on the background, which I think is good. Members of Parliament can update themselves in these series of questions. My office certainly looks forward to working with the Shadow Treasurer on any matters,
Yes.
in addition to GST, to ensure we get a more effective budget. But there's probably no need to for this particular issue, Mr. Speaker, because administratively we should be able to resolve this particular problem. Most of us agree with a lot of the sentiments you shared, and there is a decision by the government to exempt GST from DDAs and eventually provincial governments. And just for the record, GST collections projected for this year is 4,186 million. Mr. Speaker, if I can just give a quick background as well. Section 65A is part of the Goods and Services Act of 2003. This act is the basis for goods and services tax, or GST. Most of our people in urban areas know that it adds 10% to the cost of groceries, and I'm pretty pleased that we are now exempting 13 key household items from this GST. Section 65A has been a part of our GST system since at least 2007. I note the reference to 1999 by the Shadow Treasurer. And it's important to note, Mr. Speaker, that the Commissioner General of the IRC has the discretion to determine special circumstances and can issue notices to taxpayers and also withdraw those notices. These notices require the government entity or business to collect the GST of 10% and pay it directly to the IRC. This is a different process of the suppliers charging the GST to the DDAs and then paying the 10% tax to the IRC. And just finally, by way of background, back in 2021, after we came into office, as part of a process of clamping down on GST tax avoidance, the IRC started issuing more and more of these Section 65A notices in 3 phases. The first one was to deal with government departments. Second one, provincial governments and provincial health authorities, and the third one's to DDAs. The final phase was to private firms. To answer his specific questions, in November of last year, NEC did resolve to exempt district development authorities from Section 65A. The IRC was instructed through that decision to implement the exemption administratively rather than through legislative changes. But the IRC, as we all know, is provided with considerable independence in the administration of tax laws, and that remains a decision for him. Then the last communication on this matter, the Commissioner General indicated in earlier this year, I think around about April, in a written brief both to myself, copying the Prime Minister, his concerns about the NEC decision. He said that Section 65A notices to DDAs has been vital in addressing non-compliance among government contractors, and that these contractors, often major beneficiaries of public funds, have historically been the least compliant in remitting or fulfilling their tax obligations. He also advised us that the repeal of Section 65A for DDAs would cost, there would be a cost to the budget of at least 100 million kina. He was also concerned that doing this, it could incentivize, encourage non-compliance among contractors not to pay their component. Has it been implemented? No, it hasn't been. The IRC currently is recommending against the instruction from NEC and is suggesting a legislative change for Parliament to exempt the DDAs. When it comes to that, if it comes to that, if negotiations with him are not successful, then the government then will look to make that change. Thank you, Mr. Speaker.
We have a point of order. Honourable Member for Aba.
Thank you, Mr. Speaker. I am of the strong opinion that IRC is wrong in terms of the compliance for the contractors, because when the checks are given after the tax deduction, when they go to pay the services, they are also paying the 10% GST. So IRC is completely wrong, Mr. Speaker.
Honourable